All right, guys, hello and welcome. Today we're going to go over real quick how to find our daily trend, our daily institutional bias, and our daily overall long or short bias in 30 seconds or less. So for this, you're just going to need one thing. As we can see, we have fully blacked out candles. This does not involve price action. This does not involve anything. It's something you can add to your charts just for this sole purpose. I personally use, we can see up here, the EMA 9, 18, and 200. If we go to those settings, it's actually going to become standard and be called the 1050 200. Go back to inputs, change those to the 9, 18, and 200, and then we're going to change what they consider the 10, for us the 9, to green, and the red is going to be our 50 or our 18. We're going to turn that on, and it's easy as this. Go ahead and start the timer. When green is over red, you're in a daily buy on the daily time frame. When red crosses over green, you're in a daily short on the lower time frame. Done. 16 seconds. So as simple as it is and as quick as that is, there is a little bit more that goes into it, but not much. You'll see a lot of people will say, you know, you're not in a uptrend until the moving averages gap out, all that. It's simple as this. If green is over red, you're in a buy trend. Once it crosses over, you're in a downtrend or a sell trend. You're going to have consolidation. All strategies do. But this is a really quick way to hop on the daily, or even clearer, the weekly. This works the most. But daily and weekly, this is valid for. I don't use it any lower time frame than that, but it's pretty cut and dry. So let's go ahead and use gold as our example. We're going to mark where they crossed over here on the weekly. Go to our daily. We can see roughly where they crossed over there, and we will drop a line there as well. And then let's go down to our lower time frame. So this is where that third line can come in. You can either use it or you can simply go to it and increase its see-through and just make it completely see-through. I use it. I like this line. I kind of have it as like a background line. But you can see once we cross over onto the daily time frames and we're into the sell zone, and once we cross over on the weekly, we're staying below the 200. 200's a big institutional average. A lot of people use it. It's good to know where it's at. It's a very good dynamic support and resistance. You can see, resistance, support, resistance, kind of broke through but couldn't get all the way through. It's a very good, you can see, look at that, just rolls to the T as support. So it's good. A lot of people, and I've done a lot of strategies that if you want to get super, super strategic, super limited on your trades, you have to backtest this for yourself. But a lot of people wait for the cross on the higher time frame and then only look for sells under the 200, the 800, the 400, the 50, those higher period EMA, stuff like that. So that is very quickly how I can, at a glance, and this is exactly what I'll do, I will, at a glance, pull up my chart, let's say Euro USD, and I'll say, okay, on the weekly, I'm in an uptrend. In the daily, I am right now in some consolidation, arguably in a buy, but this is where you have to use your discretion. Where actually, this is a very good example. So we can see here, even when these come together, I'm going to maintain the stance that on the daily time frame, sells are still valid. Until just now, this last candle, so over this past weekend, did we cross, and we are now looking at buys, which is good because this is actually a potential buy level, and we're looking for buys up into this neck of the woods. But that is quickly, in 16 seconds, how you can find the institutional daily and weekly time frame bias with just one indicator, no technical analysis, and without overcomplicating it.